What's going on, everyone? So we're going to be taking a look at the SPY ETF here, and we're going to be seeing and kind of looking at it from a technical point of view, and kind of just going over this weekly chart here to kind of show us if that we do believe in the theory of technical analysis and supply and demand, why potentially the SPY could be looking at another leg down here. So going all the way back to 2020, we have lost a very significant level of demand. This support level has not been tested since 2020, right? So the last time we got into this range that where the level was tested was all the way back here in October of 2020. You can see we kind of had this big 3-day decline here, followed by another massive rally up, which we know lasted for well over a year and a half on the SPY before we topped out at around $479. Now, this year to start the year has definitely been a lot more tricky. It's definitely had a lot more significant red days than green days. The market is very volatile. There's a lot of things going on in the economy that is kind of swaying these ETFs and stock markets to do what they're doing. But when we kind of just look back here to 425, when we did lose this level of demand, which is going to be our support zone here, this is now going to act as a very significant level of resistance. So I'm not saying that stocks are just going to go straight down in a line. Of course, we're going to get those bounce days. Of course, we're going to get those dead cat rallies. But here's one thing that I do kind of want everyone to kind of keep in mind here, that just because the market goes green for 1 day or 2 days, or just because, intraday you get a couple of hours worth of bounce, does not mean that this selling is over. It does not mean that the momentum and the shift has changed from, bear to bull. Realistically, the SPY would need to get over at least $443 and even better $468 before we can say that this is the bottom. And that's a big problem that I see a lot of people, especially newer traders on social media. You get one uptick in the market, one green day or one engulfing green candle, and it's kind of like, hey, bears never learn, and I told you this is going up. Yeah, you know what, maybe you're right, maybe you're wrong, but you can't sort of lock in that thesis until we start reclaiming macro levels of supply. And like I said, that macro level of supply that we need to absolutely reclaim to kind of say that, hey, you know what, maybe this is the bottom, is at least $443 on the SPY, which is the 50-day moving average. Anything below the 50-day moving average is just considered a dead cat rally. Stocks moving up, but not higher, if that makes sense. So the very clear line in the sand that we have now is currently 403. 403 is going to be the 100-day simple moving average on a weekly time frame. Each individual candlestick that you're looking at here represents 1 week's worth of price action here. Now, that level in the sand is that if we do get some sort of bounce, let's say Monday, Tuesday, or Wednesday, there's some sort of significant bounce. I can see CPI data numbers kind of giving a little bit of a boost. And I can also see, a lot of newer traders start to get very excited and start to call a bottom on, a multi-day dead cat bounce. So with that being taken into consideration, the SPY can absolutely come all the way back up to 421, if not 426, and nothing changes. Meaning that just because we bounce into the 420, 426 area does not mean that the momentum has shifted. Remember, guys, keep that 443 number in mind. Keep the 50-day moving average in mind. We could still come up to 421, 426 and get rejected, start to roll over. And anytime we do lose that 403 zone, would start the next aggressive cycle down. Now, if we do get some sort of sideways action this week, maybe 2 or 3 days worth of sideways consolidation where we get a lot of choppy price action going on, I would not be betting for the stock to go higher in that kind of environment. If anything, any kind of sideways movement, any kind of choppy movement that we have, I would be looking to play the short side through 403. So as soon as we lose 403, our maximum measured potential that we are looking for is going to be the next soft landing zone of $368. Until we lose 403, we're going to be in between a range between $403 and around $425, let's call it that, which is a $25 range. However, you're going to need to play that range accordingly. It could be very, very choppy, meaning you get one green day followed by a red day, followed by an indecision day, followed by a red day, followed by an engulfing green day. But until we get over $426 on the short term side of things, we really can't be too bull biased. And until we lose $403 on the SPYs, we can't just go shorting everything and shorting the SPY ETF. So we're going to have to play this a lot smarter, a lot tighter to the vest. But just understand that if we do start closing below 403, that next measured room of potential is going to be $368. And I can see that kind of dragging out into summer, into the end of summer, before we kind of find that bottom, maybe between 350 and 360s, somewhere in that range, and then get some sort of reversal going into the end of the third quarter, and if not fourth quarter. And definitely into 2023, I think maybe we can start to see some sort of reversal out of this. If you're someone who's looking to load up because right now you feel that stocks are cheaper, I would kind of hold off. Either stocks are going to go lower, or we're going to need to reclaim the 50-day moving average. So there's really no point in jumping in now if potentially we're going to go down to 368. There's no point getting in now and then losing some money if we do lose that $400 area. And there's no sense in trying to short, on a macro perspective until we lose 403. If the market is going to reverse and we are going to make all-time highs anywhere within the next 12 to 18 months, we're still going to need to take out the 50-day moving average. So are you going to save yourself 20, 30 points here on the SPY ETF? Yeah, maybe you will. But, you could also lose a lot of money if we do decide to decline another 40 points down. So, if you're looking to load up for your long-term portfolio, let's at least wait until we reclaim the 50-day moving average, or let's at least wait until we get down to the next area of demand. I hope this video helps, guys. Join my Discord. That link is down in the description box below. Also, make sure to subscribe to my YouTube channel, as well as give me a thumbs up on this video. Leave me a comment. Let me know what you guys think where the market is headed, and I'll see you guys all in the next video.